Our next guest has been calling for this tech bounce, and he's got three washed-out NASDAQ names that could be worth a second look. Let's go off the charts with Chris Verone of Strategas. Chris, what are you looking at?
Hey, Melissa. Well, I first want to put this move in some context, because let's remember, from the September lows, NASDAQ 100 was still up 30% over the last 8 or 9 months. So you had a big move. We gave back half of it over the last several weeks. We started to find some support near that upward sloping 200-day over the last 4 or 5 days. So I brought along 5 charts. If you take a look at the first one here, what I'm just showing you is the percent of stocks above their 50-day moving average in the NASDAQ 1. That got down all the way to about 15% by late Thursday, early Friday. That's good enough to get an oversold response when you're in an uptrend, when you've been a leadership group. So we had that condition late last week. We've responded to it. I think the key over coming weeks, frankly, is going to be whether or not these NASDAQ 100 type stocks can reclaim their leadership role that they had all last spring, all last summer. I think the jury is out on that. Maybe the odd dynamic over the last several days, if you go to chart 2, has been the weakness in tech preceding this really never hit the broader market. I mean, as recently as yesterday, you were getting 35% of the S&P making a new high every single day. So I think we should take some comfort in the fact that as tech corrected over the last, called 8 weeks, the rest of the market managed to hang in there, particularly some of the cyclical groups. So let's take a look at some of these washed out NASDAQ 100 type stocks that have done enough on the downside, that seem to be responding to lower rates, or maybe dollars starting to roll back over here. What can we buy in this environment? I brought along 3 names. PayPal, I think, is a good place to start. This is a very, very timely long. They took this down 28% from high to low over the last several weeks. You're right back to that upward sloping 200-day moving average. You bounced off that 220 level. You might get another shot there, but it never violated its relative performance lows versus the S&P. I think good spot to be putting some PayPal on here. I'd say the same thing about Qualcomm. And let's remember, Qualcomm is a fantastic, fantastic long-term chart. It was just too far too fast. It got ahead of itself. They've taken this thing down nearly 30% over the last several weeks, but you're back to major support. And if you're looking for a reason to buy this stock and you're price sensitive, you're back to that upward sloping 200. It held it over the last several days. This is where you start to put positions back on there. And then lastly, I would encourage you to look at Workday. Another one of those examples where you broke this thing 20% over the last several weeks, but right back to support. And what do all these stocks have in common? Whether it's Qualcomm or PayPal or Workday, they've all corrected in uptrends back to upward sloping 200-day moving averages. That is where we like to put exposure back on. So those are some examples. I think NASDAQ does continue to rally here. Let's just see if they can reclaim their role as relative leaders.
So, Chris, a few weeks back, maybe I forget when. Time just is, so confusing these days. But you actually called for higher rates, right? So you saw the 10-year yield going much higher. So your interpretations of these charts is with the backdrop of the assumption, according to the charts, that the 10-year yield will, in fact, go higher beyond what we've seen so far?
Yeah, I think ultimately we're still looking at a 2-handle on 10-year yields at some point this year. They feel like they want to pause in the short term. I want to be mindful of that. But let's remember something. Go back to 2018 or 2019. Tech was the only game that was working, and bond yields were 250. Bond yields were 3%. You got as high as 320 10-year yield in October of 18, and tech was working. So this idea that all of tech is dead with bond yields at 155 or even 180, I think is a little far-fetched given the history.
All right. Chris, great to see you. Thank you.
Nice seeing you.
Chris Verone of Strategas. By the way, CNBC Pro screen for some other tech stocks that might have fallen too far too fast. You can see the full list at cnbc.com/pro. Guy, which chart of Chris's do you like or not like?
Qualcomm. I love Chris Verone's work, by the way. Excellent job. Qualcomm's the one now. With that said, I never thought we'd get below 145 or so, and here we traded down to 123, I think, late last week or yesterday-ish. But Qualcomm at 16 times earnings, it's not an expensive stock, so this doesn't fall into the category of should be impaired by higher rates. So I think Qualcomm on valuation, given the sell-off, is the one that I would sort of I would gravitate towards.
Of course, Chris is, of course, a technician who is in the Parthenon or pantheon of technicians out there, right? So yeah, so of course you love his work. Dan Nathan, which chart do you like or not like?
I like the PayPal. Guy referenced Qualcomm. Listen, I love that Qualcomm chart too. And when you think about, I mean, Tim mentioned what semis did today, up 6%. Qualcomm down at 1.30% from its recent highs. I do think it's important to remember they did not put up a great quarter. The stock got sold before some of these other names in the group started getting sold off. That being said, PayPal had an amazing quarter, amazing guidance, but does not have the valuation support. But this is a 17% earnings grower, 20% sales growth expected for this year, trading about 50 times. No one gave a crap about PayPal's valuation any time in the last few years. I'm not sure why they really care when interest rates go from 50 bips to 150 bips. So to me, I think you probably have a great spot on the chart, as Chris identified, in PayPal if you're looking for a level to get in.
Mel, do we have a potty mouth rule on the show? I mean, I feel like
crap is a four-letter word, but it is
triggered.
permissible. I believe it's permissible. We're not going to get a fine, in other words.
But all right. Well, anyway, so I actually think PayPal's valuation is in the potty. I mean, I think that if you look at the stocks that are getting punished, and the argument that today was a bounce back for things that were deeply oversold, but that ultimately there is cyclicality, there is some rotation, and that's not going to end, doesn't bode well for PayPal. So Chris had some great charts. He's been right. He's been dead right on rates. He's been dead right on kind of revaluation, but reacceleration of the economic story. I do think Qualcomm, and remember again, their royalty business has been resolved. They have this TE connectivity story. They have the auto chip shortage story that's working in their favor. So I do like that chart.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.